The Cannabis Conversation. A European perspective on the emerging legal cannabis industry.
Welcome to the Cannabis Conversation with Anush Desai, where we explore the new legal cannabis industry by speaking to the professionals that are helping to shape it. Wow, what extraordinary times we're living through. I hope you're all keeping as well as can be expected. We're all on lockdown now, and I hope everyone is doing their best to adapt to our new circumstances and responsibilities. I myself am getting to grips with homeschooling my two boys, so fingers crossed we all survive that. I just want to say a huge thanks to our frontline workers and everyone who's doing their part to support them. It's giving me great encouragement to see people coming together to help the more vulnerable amongst us. I sincerely hope this continues when we emerge on the other side of this crazy episode. Anyway, I'm not going to speak much more about Corona. There's lots of people doing that. We're here to talk about cannabis, so on with the show. If you or someone you know has an interesting angle that I've not covered yet, or maybe an area you'd like me to go into more depth on, please do get in touch. In the meantime, enjoy this week's show.
On today's show, I've got David Bonde. David is founding partner at Enexis AB. Enexis is a Stockholm-based investment company dedicated to the legal cannabis sector. And David will be giving us his insights on the investment landscape as we get into 2020. Welcome, David.
Thanks for having me. Very much appreciate it.
Pleasure. How are you doing today?
Doing all right. I can't complain. It's nice weather in Sweden first over the next, last 3 months, which has just been gray and cold. So spring is around the corner and couldn't be happier.
Hopefully that's a positive sign. That's good. Cool. So David, you've got a great background in investment. So it'd be good if you could kick off with just telling us a bit about yourself and how you sort of segued into cannabis.
Sure. So my parents are Swedish, but they moved abroad before I was born. So I was born and raised in France, and I went to an American high school there, and then eventually made my way to the U.S. to study at University of Colorado Boulder, and then studied media, graduated in 99, and went to New York after that. And every single bank was hiring pretty much anyone with a dog, basically. And so I decided to give it a shot and went to go work for Deutsche Bank at the time in their business development side on their global markets and equities division, and was with them for about 4 years in New York, and then eventually moved with them to Hong Kong for 2 years. And then after that, I moved over to the buy side to a short-only hedge fund called Cannabis, which is New York based but had an office in London, and then worked basically on the hedge fund side for almost 12 years with them. And then I was in London for 10 years, and then eventually moved to Sweden to work for Brummer Partners, which is the largest hedge fund outfit here. And then about almost 5 years ago now, I had a family member who developed cancer, and she was in really great pain. So, given my, I think, contrarian nature, and also having studied in Colorado where cannabis is just part of the culture and not stigmatized whatsoever, I started looking at alternative ways to remedy the pain that she had. And of course, cannabis came up. I spent quite a bit of time doing my research and came up with the conclusion that, she should be taking vast amounts of cannabis to help with the pain. Not sure it would help for anything else, but at least living out the rest of your life pain-free is a plus. Sadly, she died very quickly thereafter, so never had time to even try it. But that's where my interest really started kind of happening. And then I've been following the industry ever since. I have a lot of friends who were involved and still involved in the industry in the United States. So would always chat with them and see, what was going on and trends and so forth. And then finally, it all came to a head about 3 years ago where I thought, I'd worked in the hedge fund space for 12 years. It was time for something new, and decided to kind of take a closer look at this. So me and someone I'd met here at the playground, actually, he's French, Swiss. We sat down and started talking about this and said, we should really spend some time and see if there's an opportunity here. So we spent about 6 months looking at the industry and realized fairly quickly that if we could apply kind of a baseball analogy to this, that if Canada is in the 7th inning of a 9th inning game, the US probably was in the 3rd inning, and then Europe hadn't really started playing ball whatsoever, there was an opportunity. And so we managed to convince a handful of family offices in Sweden to invest in an investment vehicle that we launched at the end of 2018. And as a first phase was to basically allocate up to 5 million euros across medical cannabis, wellness, and ancillary opportunities. We have a global mandate, but we try to focus on Europe as much as possible. And so to date, we've made 12 investments, of which 7 are in Europe. And we will, of course, open to external investors down the line. And I think that pool of capital that we take in will probably be 100% or at least 90% allocated to European opportunities. And the reason being is I think the market in Europe has developed probably a lot faster than we expected. And I think the level of teams and competence were probably better than we had expected at the outset. And I think that's a positive thing. So that's where we are today.
Wow. Yeah. Very interesting stuff there. And interesting that you think that things have moved at a slightly quicker pace than you were anticipating in Europe, because there's other people that probably think slightly differently to that.
Yeah, I think that's probably true. Although when we first looked at this market, I think one of our first investments was EMAC Life Sciences, and we had met Antonio, the CEO, a few times. And at the time, it seemed like, this was a bit risky. He was very early, we thought, but he himself was credible. I think his team was very credible. Their track record spoke for itself. They had done this before in Canada with Afria. And so, we thought it was a really risky investment. And in hindsight, I think that, he's benefited from, execution. I think he's done a really good job in terms of just, executing and doing what he said he was going to do. And then also benefiting really from the tailwinds in the industry. So I think initially, their own forecast that they had, and by the way, we take every forecast we get from every company, we take as a bull case scenario, and then we slash it in two, and then we call that our base case scenario. And I think he's kind of beat our base case scenario and progressed quite well. So, and since that, we've come across other teams that are equally as impressive. And I think, initially what was readily available in terms of opportunities was medical cannabis, meaning cultivation or vertically integrated or distribution, as well as anything related to CBD. But, today I think what we've seen evolve faster than we thought is the ancillary part of the market. That's something that we really looked at in the US as an opportunity set, but we really see that kind of evolving here in Europe. We've spoken with, for example, a logistics and tracking company, which is starting out from scratch, but really, really interesting, based out of Switzerland. And also we made investments in both Noble, the owner of Prohibition Partners, and Cannabis Europe Events Conference. Also, another platform company called Alpha Green. So those ancillary types of businesses, I think, have cropped up faster than we thought, and that's an area that we like a lot. So
yeah, definitely. Lots of interest in that space, and good to hear that you've made moves around that. So just before we kind of crack on to sort of your industry insights and perspective, maybe it's worthwhile having a brief rundown on cannabis in Sweden, actually.
Yeah.
Contrary to popular belief, Sweden is, very liberal and progressive on many areas, but I think is slightly conservative when it comes to drugs.
Very.
What were providing recreational drugs.
So the background in Sweden is, I think Sweden is I would say, if Switzerland is probably more on the liberal side of the spectrum, Sweden is probably the most conservative country on the other side of the spectrum. There's a vast history there, and part of it is, to make a long story short, is you have had individuals and lobby organizations that have been incredibly powerful marketing a zero tolerance approach to narcotics in Sweden. And because of that, I think in the UK we hear a lot that, young adults or adults today that are anywhere between 30 and 50 years old have been taught in middle school that, it starts with cannabis and ends up with you overdosing on heroin at some point. It's a gateway drug and so forth. That is something that was really drilled into Swedish students when they were young. And that stigma has lived very strongly in Sweden. And I think, we're just starting to see a turning point now. So the Swedish government has a drug policy strategy called ANDT, which they revise every 4 years. And this is the first time that politicians have demanded a full scope review of this strategy that has never been evaluated in its full over the last 30 years, basically. And the reason why they want to evaluate it is because Sweden has the second highest drug-related deaths per capita in Europe. And so despite us having a very restrictive drug approach, we have had no decline in drug consumption. We've had a huge increase in drug supply, as seen by a complete collapse in drug prices. We've seen a huge increase in drug-related deaths. And whereas we don't track this on a regular basis in Sweden, it appears that drug abuse has actually increased as well and is quite high vis-a-vis other countries. So in many respects, our strategy has been a complete failure. So this is the first time that we're seeing politicians become motivated in terms of doing a full scope review. And the interesting thing in Sweden is that whereas the debate is very polarized, meaning drugs are bad and they should be restricted full scope. The other side is drugs are not bad and we should legalize everything. There has been very little debate in the middle about medical cannabis. It's been almost lost in the entire debate.
Yeah.
So we've had surveys that have been sponsored by government agencies or media outlets about people's thoughts on legalizing narcotics as a whole, but we've never had any survey conducted to ask people about the willingness to legalize medical cannabis for patients with specific indications where other medicines don't work.
Yeah.
And so funnily enough, we actually co-sponsored such a survey about 2 weeks ago. The results came out about a week or 2 weeks ago. And whereas I can't talk too much about it because we haven't released the survey yet.
Yeah. I mean, it's a really good summary. Thank you. And, it's probably a wider societal problem of people not talking about things in the middle, the grey bits, and everything is polarized.
Yes. It's very exciting.
Great. Fantastic. Cool. Okay. Well, so let's talk about more generally your views on the investment landscape, obviously well informed by what you do. 2019 was obviously extremely challenging and has caused a lot of money to be sucked out of the global market. How are you seeing 2020 so far?
Well, I think 2020 in December already, I think we started to see a stabilization. I think if you look at the listed, so when we started this project, one of the first things we looked at was capital formation. Where was all the capital investing in cannabis coming from? And, 95% plus, and I would argue probably 99% in Europe is really coming from retail money. So, E-Trade accounts, interactive brokers, and those type of investors, along with, a handful of high net worth individuals and maybe a very small handful of family offices. And so, I think that when we look at retail money, retail money tends to find its way to the most liquid investments. So I think what we've seen is a huge increase in capital go from retail hands to the largest listed companies, which most of them are in Canada, of course, Canopy Growth, Aurora, and so forth. And so I think if we look at what's happened in 2019, you saw valuations that were totally unanchored, didn't make any sense whatsoever. Most of that really found its way to the Canadian LPs. And the Canadian LPs obviously understood that, Canada is a limited market, and that with the valuations and access to capital that they had at the time, it behooved them to really invest as much as possible abroad. And investing in the United States, which makes the most sense, is obviously limited due to federal legislation. So a lot of that money went to Latin America and Europe. From conferences that we've been to, we found that a lot of the North American companies that have come to bid for licenses in Europe have done so aggressively. And what we call pay and play, they've done so to just make sure that they get a foot in the door. And so we wonder how profitable some of these ventures will be in the near term, but over time, obviously, it's going to work out fine. And so I think what we saw was the expectations for the Canadian LPs were probably way too high. And we saw estimates, totally cut, in the second half of this year, and stock prices have declined, materially. I think as of December last year, the average, we tracked the top 5 largest Canadian LPs by enterprise value. So Canopy Growth, Aurora, Kronos, Afria, and Hexo, and so forth. And combined, I think they had an enterprise value collapse of almost 80% from peak on average. But still, I mean, their total enterprise value today, now they've gone down ever since, right? So I'm not sure, we haven't updated these figures, but at the time, as of December 31st, they had a total combined enterprise value of around $10 to $11 billion. And the addressable market in Canada, depending on which estimates you look at, is somewhere between 6 and 10 billion. So, still very, very expensive. Whereas the European operators, significantly cheaper. If we do the same exercise, the top 5 U.S. public names had a combined market cap of around, $7-8 billion with a total addressable market of $45 billion. So, if you're looking at a value play, the U.S. looks significantly more attractive. And frankly, we were looking at some of these we don't really invest in public names because at the outset, we realized that there was a huge value mismatch between private companies and public companies. The reason why that is because retail money goes primarily to public stocks that are liquid, and very little retail money has access to private companies. So and that drove a huge arbitrage valuation-wise between the two. So we really focused on private investments. But having said that, I mean, some of the U.S. operators now look pretty cheap. We were just looking at, for example, Charlotte's Web, which at the last count had a market cap of, I can't remember what it was now, but significantly lower than it was before. And if the FDA were to provide guidance on regulation for CBD this year, which I think a lot of people believe they will, then Charlotte's Web will have access to the chain retail distribution channel, which they don't have today. And that would lift their top line significantly, which would make the stock quite cheap, actually. So I think we're seeing better value now than we have before. I think what we saw is capital dried up significantly in the second half of last year. That itself has I think, thawed a little bit. So in Europe, we've seen, some deals get done and continue as before. In the US, I think you still are, I think you've seen things calm down, but, capital remains pretty limited on the other side of the Atlantic for the time being.
Yeah. Well, there's lots there. I mean, I think in the US, I guess one of the tricky things is you talk about the US as a market size of 45 billion, but it's a bit more complicated than that because of the sort of trading across state borders, etc. I suppose that is an added element that maybe needs to be factored in.
Absolutely. And I think that 45 number is a number from Bank of America that they had forecast for 2029. So that obviously assumes
it's quite a while away.
Yeah, that it assumes that federal legislation takes place over the next, 4 or 5 years or so, which I think, even if you don't believe that we're going to have a federal legalization of medical and recreational cannabis over the next 5 years, I think what we at least will have, banking access, which I think probably will help take away those restrictions when it comes to borders. I could be wrong, but I think it will help at least. So I think it's one step at a time, and I still think that the U.S. is going to be a very, in a huge market.
Yeah, of course.
Yeah.
And so with investment, let's say, drying up slightly, are there more kind of options around debt financing?
No, I think that's pretty restrictive now. I know that. So the investments that we made in Europe, for example, they've opened bank accounts. So to open a bank account for your operating business, if it's a medical cannabis company or if it's a CBD company, is definitely doable. You can do that in Europe, and it's probably easier to do so in Europe than it is in the United States. But having said that, to actually take a loan, a company loan, a traditional loan from a bank, that's still quite restricted because banks, I'll give you an example in Sweden, for example. But in Sweden, the medical agency came out very early to say that to classify CBD as a medicine. Now, that decision was overruled by the court here in Sweden, which concluded that the medical agency couldn't provide any proof that CBD actually was medicine at low dosages. And therefore regulation falls down to the Food Safety Authority in Sweden. But even there, I mean, banks will look online and find that there's been a case against the medical agency, and Swedish institutions are very cagey, and they don't want to stand against government agency, even if they lost. So I think in that sense, getting a loan is still pretty early. I think it's still quite difficult.
Yeah, cool. Okay, well, sort of moving on to
a more positive note, where are you seeing the most sort of interesting opportunities, I guess, both geographically and in terms of types of business?
Yeah, so I think our favorite, we did a lot of work in the beginning, understanding the capital formation, but also understanding the traditional agricultural landscape. And so KPMG has done quite a bit of work analyzing and updating its analysis on the agricultural industry, the traditional agricultural industry. And they have a report from 2017 or 18 or so, where they have a very good chart explaining parts of the value chain. And so if you look at the value chain being from, input, whether it's machine or fertilizer or whatever, all the way to cultivation, and then to processing, extraction, to distribution, to brands, and then to the ancillary market. I think what you see is cultivation is probably the lowest part of the value chain. It's a fragmented part of the industry. It has low margin over time, and it's very volatile. And of course, farmers that are farming corn, the last thing you want is to be profitable for 2 years in a row and then to have massive losses for 2 years in a row. You'd rather just be profitable, over time. And the most attractive part of the value chain really is the further up you go. So brands are attractive. They typically have 10 to 20% margins over time, quite stable business, benefit from lower commodity prices. And then the ancillary the ancillary part of the industry is also extremely attractive. So those are the two areas that we try to focus the most on. And as I said initially, the ancillary part of the business was something that we found was attractive in North America. So, for example, one of our initial investments was an investment in a lab testing company based in Los Angeles. Extremely attractive part of the value chain, very high margins. Fairly high moats, since you don't have any traditional food tasting companies willing to engage in the United States, given the federal legislation. So extremely attractive. But now we're seeing that part of the industry evolve in Europe. And that's happened quite fast again. So our investment in Noble was precisely that. Not only do we think that, they're really good chaps, but, we also love the fact that they're involved in part of an industry that will grow in line with the overall medical and wellness industry in Europe, but evolved on the events and data analytics side. Likewise, with Alpha Green, it's a marketplace businesses like Just Eat, for example, good example, very high margin business, very scalable. And not only will this grow intact with the industry as well, but it'll have incredibly high margins. So very attractive side of the industry. And there are other businesses like that in Europe, which are cropping up now, which again, didn't exist 12 months ago. So those are the areas that we're focusing on. It's really brands, ancillary businesses. And we certainly do like the vertically integrated players like EMAC and Dragonfly, but they really have to be truly vertically integrated.
Yeah. I mean, would you mind elaborating a bit more on the vertical integration point?
Yeah. And so I think in terms of vertically integrated businesses, it's businesses that do both the production and distribution of products. So for Dragonfly, they do both the cultivation in Eastern Europe, they do both the processing and extraction, and then they do both white labeling, and they have their own brand as well called Dragonfly Biosciences, which you could find across UK retailers. And again, I think the benefit there is that if wholesale prices of raw hemp biomass collapses, like we've seen in the United States, then the benefit if you own a brand is that you get a margin catch up there. So long that your brand is strong, you should be able to defend your pricing, and you should be able to benefit from the drop in raw material that you're producing. So the cultivation side has lower margin, but you'll have a catch-up effect on the brand that you sell. So in that sense, vertically integrated businesses are fairly well protected. And for Europe, we think that's an attractive play because the restrictions that you have in the United States, meaning that you can be vertically integrated, but you can't really ship product from one state to the other, whereas in Europe you have. So we see that the efficiencies are potentially more attractive.
Yeah, that makes sense. And so looking forward, what do you think, or what would you like to see changing in Europe in order to sort of accelerate progression in this market?
Well, I think
there's loads of things there, probably.
Yeah, but to be honest, I'm going to say this with limited knowledge, so I might be shot for saying this, but I think that the EU has done a relatively good job to try to come to the table with some sort of regulatory framework or some sort of recommendation faster than what we've seen by the feds in the United States. So when it comes to, for example, CBD, the EU has, or the European Food Safety Authority has come down with a recommendation that it should be classified as novel food. And you can say what you want about that classification, that it should be novel food or it should not be novel food. But at the end of the day, it's guidance. And with guidance, you can actually start planning your business around that. And so I think that's a good starting point. Now it's up to every single individual country to either adopt that recommendation or to work towards that recommendation or to fight against that recommendation. But I think what we've seen is that countries are starting to steer companies towards novel food. So just like in the UK, I think we had an interview last week speaking precisely on this point. The UK FSA has basically agreed to allow companies to trade, CBD companies to trade, but that they have to submit applications by March 31st, 2021. And that's really positive in my view, because it provides companies with a framework and a pathway to have authorization to sell a product, which will then get into retail chains, shelves, stores. And that's a huge part of the distribution channel. And I think that will happen hopefully relatively soon, 2021 or 2022, which then creates a huge amount of credibility for the CBD as an industry as a whole. So, so I think that's been positive. But of course, I think, you could probably do more. But from what we've seen, it's a lobby effort that really takes place on a country by country basis. And what we've seen in Sweden, for example, is, the anti-drug lobby as a whole is old and it's very powerful. It's very well funded. Whereas those who are striving for change, they're very young, they're very ambitious, but they're not as well funded. So they need more representation, they need more funding, and I think that will take time.
Yeah, I think certainty is definitely very welcome, because I guess it allows you to plan, which is something that was a kind of sword hanging above everyone's head for a lot of 2019, not knowing what was going to happen around novel food. So I think the clarity is welcome. And cool. So as we get towards the end, I've had a few people on the show to talk about what happened in Canada in 2019, and there was an awful lot of mistakes. Do you think that businesses in Europe are learning from those mistakes?
Yeah, I think so. Again, I think, what we've seen in Europe throughout the second half of last year and early this year is the complete collapse in the public market landscape has certainly affected, private company funding as well. We've seen, private companies looking to take in capital are, the ticket sizes have been cut in half, and the upfront valuations have been cut in half as well. So I think for us, that's just been more of a benefit. I think we've been able to to be very picky and to negotiate probably a little bit harder. So I think that's been very good. Now, what we've seen, and I caveat this, that, we're not professional U.S. investors. We don't spend all our time in the U.S. or Canada. So the comparison that we're going to make is not, it's not super informed, well informed. But I would say that the quality of companies that we've seen in Europe has been, very high. And I think the reason being is I think in Canada and the U.S., you have an attitude of go-getters, we're cowboys, we're going to defy the market, we're going to create a new market, etc. I think in Europe, people are far more conservative, for better or for worse. There's good and bads about both, But in that sense, I think, the seriousness of some of the companies, especially the larger companies taking in capital, for us, it seems like they're more credible, more serious teams, more, better organized, In the U.S., we've seen companies throw around crazy numbers that they want to take in terms of capital rounds. And we look at them and say, that's just impossible in today's environment. Whereas in Europe, I think that they're quite quick to realize that and quite quick to lower their up rounds and lower their ticket sizes. So I think that's what we've seen in Europe. But having said that, I think you've read just as much as I have. You have some companies out there. You have one company that's looking to take in, or that's already taken in 20 million euros in funding, a German-based company. These are huge numbers, I think we'll see more and more of that.
Yeah. Well, it's good to see that there's an upside to some conservatism as well.
Well, I have a bullish view, so I don't know if I don't know if 2020 will be the year where the market stabilizes and back off to the races, or if we still have some hard times ahead. I think, the lack of funding is going to be problematic for companies that are not generating cash flow and that have, debt on their balance sheet. So I think you'll have companies, that are going to be struggling going forward. Maybe a handful of large profile bankruptcies. You've already had one. But so I think that's going to be the challenge going forward. But then again, I think on the flip side, if I'm an investor and, we're sitting at a 14-year or 12-year bull market cycle, now the coronavirus has created a lot of issues in the market and corrected the market to some degree. But if I were to allocate capital today, I look at one small sector, which is cannabis or medical cannabis in Europe, and see that public prices have collapsed. And I see the growth rate that they have. And if I'm a long-term investor, I know where I would put my money. And so I think that you benefit from almost a win-win situation, which is if Trump is reelected, he's going to do everything he can to get reelected. So he's going to, either fiscal spending or whatever he's going to do, he's going to try to do it. He knows that the economy is very important for him to get reelected. So he'll do whatever it takes. You have central banks around the world that have lowered interest rates because of the coronavirus. You have, crude prices, which are now down 30% today, which is good for consumer spending over time. So yes, the economy will slow down this quarter, next quarter, maybe even the following quarter, maybe for the full year because of the coronavirus. That's just my own personal opinion, of course, and you never know what's going to happen. But that's the way I think of it. Yeah.
Yes, do your own due diligence is the phrase. Well, thank you, David. That's brilliant. As is customary, my final question is: what did your parents say when you?
I love that question.
When you told them you were setting up a cannabis investment company.
I love that question. So I left my previous job because it was just time for me to do something else. And I hadn't fully decided that I was going to engage myself full time in the cannabis sector. But something just clicked and, almost like the universe calling me to tell me to do this. And everything's just suddenly made sense. So I called my dad up the moment I made my decision to engage fully. I said, Dad, I think I know what I'm going to do now. He's like, what is that? I was like, I'm going to invest in the medical cannabis space. And he's like, what? What are you thinking? He didn't know what it was. And so he thought I was pretty crazy. And then my dad, they live in Switzerland. My dad went to an event sponsored by a medical organization in Geneva. And he sat next to a Swiss/Swedish woman who has a very strong background in the industry. And she asked, how are the kids? And he said, they're doing okay. But my son, he's getting into the medical cannabis space. Don't know about that. She's like, what? You're kidding. You have to tell him to contact me. This is the future. We have to talk. So then my dad called me afterwards, like, David, did you tell anyone about your plans to launch a fund? Don't tell anyone. They're going to steal your idea. So suddenly he was my biggest, supporter and still is, so they've been hugely supportive of this once they've realized that the future has a potential. So
yeah, cool, yeah. Great. Well, I'm glad that's a happy ending to that story.
Awesome.
Cool. Well, thank you, David. That's really, it's been really, really useful and quite positive, actually, I think. So hopefully the signs for the future are good.
We hope so.
Yeah. Thank you. Cheers.
Sure. Thanks, Ash. Bye.